The battle for lower interest rates is not between the Federal Reserve and President Trump. In order to get lower interest rates, all of us should be watching one thing and one thing only, in my opinion. And that is, quite frankly, simply oil prices. Oil prices are the linchpin, the first domino, whatever you want to call it, to getting lower rates. Why do we need lower oil rates to get lower rates? Why isn't it not just President Trump beating up Jerome Powell, beating up the Fed? Well, it's just not how it works. If you need a refresher, I remind you to go back to, what was it, 4 months ago, when the Federal Reserve started cutting rates. The Federal Reserve now has cut 100 basis points. And the long end or mortgage rates have gone up about 100 basis points. So to think cutting rates would magically lower interest rates is naive at best or ignorant at worst. What is happening? Well, since the Fed has lowered 100 basis points, the expectation for inflation has gotten worse. That is what has happened. That is the thing, is inflation expectations have gotten worse. So how do we reverse that? Well, the simplest way to reverse that is to take oil from roughly $80 a barrel to $60. If we can start getting gas prices, heating prices, food, delivery, all of those things cheaper, that will dramatically change inflation expectations. People are very simple. If you could show them that things are changing day to day, like gas prices, the expectation for inflation will drop. And when the inflation expectation drops, long rates will drop. The spread between 10-year and 30 years will drop. Now, I know it makes great headlines to show the battle between Trump and Powell, but you're missing the point. You're missing the bigger picture. You're frankly missing the game. If you watch oil, that will lead to understanding inflation expectations. So that is what we should understand. The second thing I just validated this morning, as Jerome Powell's term is up May of 2026. So he will not be coming back, probably for both decisions. He doesn't want to come back. Trump won't want him. But he will be out May 2026. Do you guys remember Billionaire Barry? Remember Billionaire Barry going on CNBC with his lovely PowerPoints talking about how the Fed did this and the Fed did that? And I think Barry had to, he had to shut down his mortgage company. He had to sell single family homes. He was just in all kinds of pain because Billionaire Barry had floating rate debt. Well, something interesting just happened. Something, frankly, very interesting. Billionaire Barry, Starwood, just bought 151 single-family homes in Las Vegas for $58 million. That's roughly $385,000 a door, a house, which I think is interesting. Billionaire Barry was complaining and whining and clearly in a lot of pain. Billionaire Barry has been kind of silent for 9 months, maybe a year. And now Billionaire Barry is making moves. So I wonder what that means. If Billionaire Barry is back to buying, it probably means he's gotten his debt structure right. He's gotten his balance sheet right. And he is looking to pick up bargains. So the poster child for pain, after Jerome Powell said there shall be pain in Jackson Hole 3 years ago, is now I don't know, basically saying pain is over. Can it be that simple? Could Barry be the sign that the pain is over? I don't know. I thought it was interesting to read. Let's talk about important economic metrics next week. They start on Monday. New home sales. New home sales last month were 664,000. They are expected to go up roughly 1% to 671,000. Again, remember on Friday we got existing home sales, which now peg last year, 2024, as the worst year since 1985. We did 4.06 million homes sold in 2024, existing home sales. We'll talk more about that later. There's a lot of folks out there that are clamoring for 2024 to be the bottom. You guys know that I do not believe that. I believe that 2025 will mark the bottom, but we'll talk about that in a minute. On Tuesday, we will get Case-Shiller. Again, at this point, Case-Shiller should be understood by all of you as kind of outdated. This will be November data. We're in January. Shoot, we're almost in February. We also get consumer confidence. It's expected to tick up from 104 to 106. And then finally, durable goods, right? Are we going out and buying items that are expected to last 3 years or longer, right? Durable goods. So very interesting. Wednesday will be a big day. We get the wrap up of the Fed meeting. We will get the rate decision. I didn't check the markets, but it's got to be 98, 99% no cut. I cannot imagine a cut. Frankly, can't imagine a raise either at this meeting. Again, I stand by the fact that I think December was a mistake, but that is now over. Powell press conference will be interesting. He will be asked, I don't know, repeatedly about, is he afraid for his job? Is he going to quit? What about tariffs? What about this? What about that? It's just going to be, Jerome Powell, frankly, bobbing and weaving. I don't think we have enough information to really get concrete questions or frankly, to even create concrete answers. I think Wednesday's press conference is going to be kind of blah, just a bunch of shadow boxing. Thursday, we will get weekly unemployment claims. Again, we are watching that number. It did tick a little higher last week. I think it was 231. We shall see. And then we get pending home sales as well. And then Friday, the big number, inflation, our third and final reading, we will get PCE. I don't know why people think this is good. PCE last month was 2.4. It is expected to go up to 2.6. Core PCE is expected to stay flat at 2.8. So again, lots of stuff next week. Fed meeting, PCE, pending home sales, another full week of economic data. Folks, our Vegas event is less than 3 weeks away. I think it's actually 2 weeks away, something like that. We are now down to 34 tickets with 2 VIP tickets. We've sold 21 virtual. Please get your tickets. I am thinking about turning off tickets on Friday of this week. That way I can just stop talking about it and just focus on the event. So if you do want to come, if you are expected to come, please buy your tickets this week. Again, I'm going to probably turn them off on Friday so that I can just get this behind me and we can just focus on putting on a wonderful event. So again, go to Eventbrite, get your in-person ticket or your virtual ticket. Lance Lambert at Resi Club put out some excellent information produced by the Mortgage Bankers Association. Something I had not looked at but have thought about is how many folks today, how many households today are in forbearance? If you guys don't remember, I think forbearance, fell down. Oh, well, I'll put it up later. Forbearance was over 2 million folks at one time. It's now 235,000. 235,000. Yeah, that's right. Last day of tickets, January 31st. I like that. I like it. So 55% of them are temporary hardships, loss of job, death, divorce. 42% natural disaster. And 3%, still 3% from COVID. Wasn't like COVID in 2020? Crazy. Anyways. So let's talk about what Wells Fargo economists were saying, that we had such tremendous momentum in December from pending home sales and existing home sales, that they now expect 2025 to be better than 2024. Again, remember 2025 came in at 4.06 million. I don't see it. I mean, a lot of you are interacting with me. A lot of you agents are talking to me about how bad January has been. I do think it is interesting, though. We had that conversation with Danielle from Austin about home buyers accepting 7%, which is an argument I am willing to have. I am willing to say that Wells Fargo could be right. We have had a lot of constrained demand. We have had a lot of folks that have been trying and unsuccessful. Perhaps at some point they just say, honey, the kids are not getting any smaller. We are done with bunk beds. We got to do it. Maybe. That certainly could happen. I certainly think that will happen. But will it be at a scale that makes 2025 better than 2024? I guess we shall see. Wells Fargo is calling over, and I am calling under. Let's send out a couple of quick congratulations. I want to thank David. David joined school. Again, remember, you could join school for 67 cents a day. It is the place to be. 365 folks going in the same direction, multiple masterminds and accountability groups, free education, all of that stuff. Join today. You won't regret it. And if you do, stop paying. It's a monthly thing, not a yearly thing. So 67 pennies a day. And of course, let's congratulate Jason. Jason got his next deal, and he will be getting a card in the mail. Don't forget, if you ever get your first deal, we'll send out one of these little golden tickets. But Jason, this is for your next deal. So congratulations for that. What else do we got? Oh, yeah. It's official. Existing home sales got some interesting data, 4.06 million. We talked about that. But folks, do you realize if you were to adjust that for per capita, it would be way worse. 1995 versus 2025, we have 80 million more people. 80 million. And again, I believe 2025 will be worse than 2026. So pretty scary. If you don't know why I feel that way, go get the 50-year spreadsheet off my website, onerentalatatime.com. It is free. And I just ask you to look 1978 to 1982. It took 5 years to find the bottom last time. And the final year was the worst year when you look at the change. So I am leaning into that to see what happens. A couple more things as we wrap this up. Let's talk about earnings. We've already done economic data. Who are the earnings I'm looking at next week? Starting on Monday with SoFi and AT&T. And then we're going to start getting small banks. The big banks did great. The mid-sized banks did okay. What about the smaller banks? We are going to start to see that on Monday. Tuesday, we will get Boeing, General Motors, Royal Caribbean. Royal Caribbean is one I'll be looking at. Are the boomers, are the wealthy still buying cruises? What is going on there? We'll get JetBlue, SAP, and Starbucks. Has Starbucks started to turn the corner? Is Starbucks still down in China? It will be all those things. Wednesday, we get Tesla, Meta, Microsoft, ServiceNow, and IBM. Thursday, we'll get UPS, Southwest, Apple, and Intel. And then Friday, we will get Exxon and Chevron. Larry Summers out there with some warnings. Larry Summers saying assets are becoming very bubbly. Last seen since the financial crisis. I'm guessing Larry Summers is nervous what's going on. And then finally, the American Express CFO. Spending picked up at the end of the year thanks to millennials and Gen Z. I got to tell you, I did not think American Express would be the card of choice for Gen Z and millennials. But hey, what do I know? Frankly, I don't even have an American Express. So again, Gen Z and millennials, we're seeing spending. So again, it will be interesting to watch, folks. If you are still watching this and you enjoy these live daily financial news, hit that subscribe button. We do it 5 days a week for your enjoyment. We have some fun. Also, please buy your tickets for Vegas. I will turn it off on Friday just so I don't have to worry about it anymore. And go ahead and join school if you have any interest in real estate, as it is the place to be. Take care, have fun, have an amazing day, and please don't forget to smile. Just smile. You have a better day when you smile. Later.